Okay, we're looking at a British pound 15-minute chart, and one of the things that I failed to mention is that typically with scalping, I think you want to scalp really mostly on the British pound, although it can be very volatile and very risky. Then the next alternative would be the euro or the Swiss franc. Outside of that, I think that you really don't want to be scalping any other currency pairs. Now, what we're looking at here is we're looking at a British pound 15-minute chart. And you see this vertical line here. This separates the day. So this is 0 hours, 100 hours GMT. This is the previous day's high. Down below we have the RSI. It's an RSI 20 with an overbought and oversold red line of 60 and 40. So this just helps for the counter, sort of the counter move bounces, and if it's in excess of 40 or below 20, then we can look at an overbought oversold scenario on the short term. So this is RSI 20 on the 15-minute chart, and I use it typically an 18 on the 5-minute chart. Now what we're looking at is I've just drawn these horizontal lines here just to give you a feel for where the last few levels of interbank resistance and support are. As you can see here, support became resistance, and resistance became support, resistance, resistance. Now we look for this resistance to be support, and you could actually look for a trade down towards this line, targeting this high right here. But right now we're really targeting this high because this high is also a long-term range, the high of a long-term range. And just let me compress the chart so you can see where we're at. You see this range that we're in? You see these highs here and here and here. Now, right now we're targeting this high right here. So let's just again move that out. Now we're targeting this high, and you'd want to place your sell order literally right at or about the high. And right now we're just testing the backside of this level right here. I mean, you could even buy it there because you've got from the low 71. The high right here is 89.91. Okay, so if you placed your order at 91, price spikes through. Now typically, even if the market is really bullish and the move for the day is going to be up right through this level, you want to place your order, pretty at or about that high, sometimes below, sometimes I'll even place it above. But the reaction alone should get you over 10 pips, just the reaction off that high. So if we placed the order at 91, the low right here came down to as low as 75. Okay? So that would have given you 10 pips. Even more now, it reacted even lower to 69. And now price has come back to this level of resistance, becomes support, and therefore you'd want to maybe take some of your profit out here if you're just scalping. It's even a potential even for a long entry. Now price works its way through. Now once price works its way through, now you can look at this resistance to potentially become a level of support. Now be careful about it being right on that high of 91. You want to give it some room to work between the body and the high of the candle. So anywhere within that area, and it's your choice and your risk if you want to play it. But wait for the market to come down. So here market comes down to a low of 88, so you can maybe get a fill of 95. Now if you place an order down here, measure what the high here is, and the high here is 06. Okay, so if you got a fill of, let's say, 95, accounting for the spread, because if the bid's 88, then the best you're going to get on a 4-pip spread is 92. So let's just say you got filled at 95. Well, determine how much room you've got to that high, because price might just move to that high and just consolidate up here for a while. So that high is 06. That gives you enough room to get 10 pips. And we watch the market. It does stall there, but then it continues through. Okay, and now we see that this level right here may come into play again. price is stalling here, but we may see another spike down right to this level of resistance, which is support, which could offer another bounce because this is quite an aggressive move. And here we bounce from a low of 92 to 07. So we bounce 15 pips. Just that bounce right there is 15 pips. And that's a nice bounce. And then it continues further. And as we move forward, the level continues to hold. So that's an example of the type of price bounces that we're looking for just using support and resistance. Now obviously as price moves up, you're going to look at your higher time frames to see what price levels are up around 90-20 area. In fact, I wonder if we can even see it here. Okay, so we actually have one right here, a high of 90.22. Okay, so price came up and bounced off of this high right here as well, and bounced just nicely off of that level. And that is a high of 90.26. So it moved 4 pips higher and then responded. And then you see these highs here. Resistance is acting as support at this time. I really think support and resistance is the best way to scalp it. Then you can add in the Fibonacci and the pivots and other factors as well. So for example, if you're going short here, if you were to pull up your pivot points, you'd see that we're in a sell zone. Okay. So right here is your central pivot, and this is your S1, and that is your M4. Okay, actually not quite M4. But you're in the sell zone up here. Here's your S1. We had a reaction off the S1, but then the level of support overrode any other technical factor.